Good morning, everyone. I am Kathleen Sebelius, the Secretary of Health and Human Services, and I wanted to talk to you for a few minutes today about a new report that we're releasing. You can get hard copies here or visit our website, healthreform.gov, and the report is entitled Insurance Companies Prosper, Families Suffer. What the report does is document some of the extreme premium increases that some of America's largest insurance companies have requested over the past year to shine a spotlight on what's happening to families and small business owners across the country. In this last year alone, the largest insurance company in Michigan requested a 56% rate hike. In Connecticut, it was 24%. In Oregon, we saw a 20% rate hike being requested. Maine, it was 18.5% last year, which was actually denied. And this year, they've come back and asked for a 23% rate hike. And most recently, which has gotten a lot of attention, is the WellPoint Anthem request for a 39% rate hike, which would affect 800,000 of their individual market customers. Now, to give just an example of what that means if you're dealing with this as an insurance customer, we have a letter from a mother in California whose premiums have been raised 38% recently, and that translates to her family $7,000 more a year for the same benefit package that she had last year. And one of her sons has type 1 diabetes, so she really has almost no choices in the marketplace. With a child with pre-existing condition, it's impossible for her to find other coverage. So she can either pay the $7,000 extra or drop coverage altogether. We're seeing this at the same time where not only is there an economic downturn around the country, but we know that insurance companies are not suffering that same kind of downturn. The 5 largest insurers in America have declared more than $12 billion worth of profits in 2009. WellPoint alone posted a $2.7 billion profit in the fourth quarter of 2009, just a week before they filed for a 39% rate increase. Last week, I sent a letter to the CEO of Anthem, which is the Blue Cross company under the parent of WellPoint, and asked for some explanation of these rate increases. And in part in response, the company has now suggested that they will delay the increases for 2 months, responding to the California Insurance Commissioner, to our request, and to come and discuss the situation with members of Congress. But I think this kind of rate increase gives a highlight to why the president said a year ago we need to address health reform, comprehensive health reform, as part of addressing the economy. We won't fix the economy without fixing our health care system. It's why he's invited, a week from today, leadership from the Democrats and Republicans from the House and Senate to sit down, roll up their sleeves, and talk about a comprehensive health reform plan moving forward, and why he's urging Congress to continue on the job that they started until they finish this project for the American people. The plans that are pending in Congress actually would give some additional authority to this agency, providing oversight on insurance companies across the country, making transparent the kind of rate increases that are filed on a routine basis, but often very hard to determine and hard to highlight. They would have to be available to Americans. We'd be able to see not only the rate increases that are pending, but the justification for those rate increases. Both the House and Senate bills contemplate medical loss ratios. So companies would have to spend the majority, the vast majority of the money coming in the door on paying medical benefits, not on overhead or advertising or CEO salaries. And we'd have a new consumer-friendly marketplace. We'd have choices for customers like the mom in California who currently is really caught. Just finally, there, again, continue to be examples out of California. We have a woman who saw Anthem raise her rates over 30% last year and said as a self-employed, hardworking person, she has no other options for health coverage. She's pretty typical of the 800,000 customers caught in that individual market plan, but also consumers across the country who have no affordable options and no way to avoid the kind of rate increases that they're seeing. So we think it shines a light on the urgency for health reform, and again, the report is available on healthreform.org or on here in hard copy. And with that, I'd be pleased to answer some questions. Yes, sir.
Madam Secretary, with the naming of Anthem as one of the targets, I guess, of your points that you're making, and there are other names in the latest reports that have come out, is it getting kind of corporate personal? Are you going after specific targets here and trying to pressure them into holding the line on their rate hikes?
Well, I think that there isn't an intent to select certain companies. Unfortunately, this is pretty widespread. We're talking about the data that's available and accessible, and the companies that we know have filed these rate increases, but unfortunately, they're not isolated cases. What we'd like is transparency for every company in every state in the country, so these wouldn't be, picking and choosing. And in most places in the country, these marketplaces are very, very concentrated. So the largest companies in, I think, every state but one are the companies we selected for their rate increases, and they dominate the market. Yes, sir.
Madam Secretary, as you pointed out, this is a problem that the President's been talking about for more than a year. Everybody kind of understands the problem. Can you walk us through what Democrats in the administration and Congress are going to present as their solution to getting this done, to getting reform finished in the summit next week?
Well, I think that the Democrats have actually been engaged in working on solutions for over a year, and comprehensive legislation has passed both the House and the Senate. A lot of it is very, very similar. There are, as the President said, he wants to hear some solutions from the Republicans who suggest that they are also interested in health reform, but so far have not come to the table with any kind of comprehensive proposals. So the opportunity is there next week to talk about the principles that the President feels are very important, lowering costs for families and businesses. And again, the Congressional Budget Office has suggested that if you looked at just the individual market, which our report focuses on, and look at the impact of the House and Senate bills on the individual market, comparing similar benefit packages and what will happen with health reform, premiums will go down between 14 and 20% just by passing the bill. So addressing costs, addressing long-term sustainability, does it lower the trajectory of healthcare costs over the long run? Does it cover more folks? And does it get rid of the current insurance practices which right now lock people out or throw people out of the marketplace? Yes, ma'am.
Secretary, you were an insurance commissioner yourself.
I was.
Don't states have the current authority and ability to take a hard line against these kinds of rate increases? And if so, why are we not seeing more activity from the states to manage this?
Well, some states do and some states don't. In California, where the rate increase was filed, they have the so-called file and use rating authority. So a company basically puts a rate increase in place, files it with the insurance commissioner's office, and after the fact, the insurance commissioner can go back and deny it or lower it if it doesn't meet, in California, a medical loss ratio of 70%. The laws vary around the country. Some do have the sort of prior approval. So in Maine and a couple of the other examples that we gave here, the rate had to be filed in advance, and the insurance commissioner actually did take action. What we would anticipate, again, what health reform anticipates, is that the first line of defense, if you will, would be the state insurance commissioners. They're on the ground. They have the data collection ability, but then we would have also a very transparent process nationally with not only rates being filed in advance, with transparency of what the justification for those rates filings are, but also a national medical loss ratio, which frankly would be tougher than California, and companies would be expected to live up to that. And finally, a specification that if a company wanted to participate in the new exchanges, in the new marketplaces once they were set up in 2014, one of the criteria would be to examine their practice between the time that the legislation was signed and the time that the marketplace got set up to see what they have done to their customers in the intervening period. So huge profit margins and huge rate increases would make a company an unlikely participant in the new marketplace. Yes, sir.
Thanks, Madam Secretary. You've said and you alleged in your report that this is profit-based, profit-motivated. The insurance companies, to a large extent, are saying, you know, this is just healthcare costs. They're left with pools of people who are sicker, and it's pure economics. What's your response to the argument that this is just a pure economic decision on their part?
Well, I think that while we don't want companies to be insolvent, because then no claims get paid, and there's always a balance between you know, making sure that there's enough money in the door to pay claims, and there are the ability on into the future to pay claims. Insurance companies in the health insurance market have made 250% profits over the last 8 or 9 years. The 5 biggest companies in 2009 alone, at a time where we saw a huge economic downturn where the GDP posted a -% increase, we had insurers, these top 5 insurers, who had $12.2 billion in profit. So to suggest that this is entirely in line with even healthcare costs, which clearly are still exceeding typical inflation costs, these profits are wildly excessive, are way over anybody's estimate. There are also companies where, you know, the top execs at these companies are paid up to $24 million each, huge overhead costs, lots of advertising budgets. So I think the ability to say what percentage of what you're collecting is actually spent on health payments, providers, hospitals, medicines, and what percentage is either profit or administrative overhead is something that a light should be shined on, and that's really part of what this transparency would be about. I know we have some callers. No, we don't. Never mind. Yes, sir.
Yep, Madam Secretary, the Healthcare Summit next week.
Yes.
Up to now, we have 2 Democratic bills, a House bill and a Senate bill with significant differences between them. Is it your expectation that there will be one Democratic proposal next week, or are we going to look at 2?
I think the president has indicated that he intends to have a proposal which he will put on the website and available for public consumption before the summit. So there will be one proposal.
That one proposal would be coming from the president, and would it represent the best of the 2 bills, or?
I certainly hope so.
Okay.
Yes, I think it is the president's, and I think that the idea is that it will, you know, take some of the best ideas and put them into a framework moving forward. Yes, ma'am.
2 questions. First of all, thank you.
Oh, you're cheating.
2 quick ones. These premium increases, are they primarily affecting people who are on the open market? Are they affecting people who are in employer-sponsored plans?
These are all individual market
All
increases.
individual market.
Yes.
Which is approximately what percentage of Americans with health insurance? I'm trying to get a sense of, you know, how many Americans are being affected by these increases. And the second question was, why do you think health insurance companies are doing this if they're making such huge profits?
Well, I'm not sure. I don't want to give you inaccurate number. I know millions of Americans are affected by the individual market, and it's the least secure marketplace and the one that people have virtually no options because they don't have an employer negotiating for discounts in providers and discounts in pharmaceuticals, and they don't have group protections. They don't have often the group rating laws that exist. But I do know it affects millions more now, because a lot of companies, unfortunately, have dropped their group coverage and are more people are in the individual marketplace. Insurance companies are often responsible to shareholders as well as policyholders. And so there is sort of a dual responsibility in terms of fiduciary making money. Look, and frankly, when you're selling health insurance, you make more money by having people who don't get sick than people who do get sick, by paying out less in benefits, by having a market strategy that has a healthier marketplace instead of a sicker marketplace. And I think that these are strategies that are typically employed to some degree or another in the individual market, where they're not necessarily rules of the road that govern it. They're not the rating rules that exist. And people are really out there on their own, often medically underwritten on their own. So your own personal health history is what may determine your costs. And clearly, there is still a profitable marketplace to be had. And knowing that a lot of these customers have no choice. Their really only choice is either pay the increased rates or drop the coverage. They don't have a shopping place to visit.
Last question, please.
Yes.
Thank you, Madam Secretary. Julian Piquet, Inside Health Policy. There is in your press release here, there's an attachment that seems to be a brief synopsis of the plan that will be released soon, I guess. And it repeatedly uses the singular in referencing the health insurance exchange. I'm wondering if we can take that as a signal that that's what the president wants versus the Senate bill's state-based exchanges, plural.
I think that what the press release is indicating is what are the sort of common features of the House and Senate bills. They both contemplate exchanges. As you know, they're different versions. The House contemplates a national exchange with a state opt-out. The Senate contemplates state exchanges with a national opt-in. So at the end of the day, you have potentially a fairly similar framework, depending on how many states actually would meet the framework. But having said that, I don't think the final version has been specifically determined at this point. But it will be available before the 25th, and it will be on the website. So that will be done in the next couple of days. I know it will be before the meeting on the 25th. I can't tell you exactly when it will be posted, but it will definitely be posted before then. Thank you all for coming, and again, healthreform.gov.